Uh, Good evening, one and all. Respected Chairman of the SRSB, Dr. and CA Sanjeev Singhal ji, the other panelist, Mr. Rohit Nayyar, Mr. Suman Lodh, Monomita Nandi, then Mr. S.K. Gupta. It's indeed a pleasure to welcome you all to this virtual CPE meeting. Very good evening to one and all. Sustainability Reporting Standard Boards of the Institute of Chartered Accountant of India welcomes you to this virtual meeting on the Sustainability Reporting Maturity Model. Friends, globally, sustainability, integrated and other forms of voluntary, environmental, social and governance disclosures are gaining more importance. Sustainability disclosures, as we all know, facilitate the investment community's capacity to evaluate the company process and performance of for identifying, managing, and measuring ESG risk and opportunities. It also helps to establish and maintain trust between a company, its shareholder, and other stakeholders. Business responsibility and sustainability reporting provides an opportunity to businesses to communicate in an open and transparent way with the stakeholders and disclose non-financial information to the stakeholders. BRSR focuses on the adoption of responsible business practices in the interest of a business social setup and environmental on one hand, and explain how an organization impacts the environment and society over time together with its governance perspective on the other hand. In this endeavor, the board has come out with a proposed BRSR scoring and sustainability reporting maturity model. A maturity model is a tool that helps the organization to measure their ability for continuous improvement in a particular discipline. The proposed model would assist organizations in not only assessing their present maturity level vis-a-vis sustainability reporting, but also in identifying improvement areas for reaching higher levels of maturity. In the present scenario, professional accountant need to focus on integrated, significant natural and social capital issues into management information and provide clear communications to facilitate transparency through stakeholders' communications and disclosures. The virtual CP meeting is being organized with an object to bring in awareness about the need of this sustainability reporting maturity model, its advantages and challenges lying ahead for all the stakeholders. Sustainability Reporting Standards Board of ICAI is working persistently towards upskilling the members in this emerging sustainability ecosystem for contributing in the attainment of the global call of sustainability through its various activities, including research, developing assurance standards on areas related to sustainability, conducting webinars and capacity building programs, awarding best practices, and partnering with government regulators and other bodies. The board has taken this initiative to bring together global eminent panel speakers, and it's our proud privilege to have them for deliberation on this very pertinent topic of sustainability reporting maturity model. And friends, let me tell you, under the leadership of Sanjeev Singhal ji, this particular year, we did wonders with the support of all the corporate members and special invitees, and also the panelists who have guided all the members of our fraternity to upskill their skill set and build the capacity in this area. With this, I welcome you all once again and thank you all. And over to Chairman, sir.
Thank you, Durgesh Bhai. You have been very, very instrumental in our board achieving the desired objectives, rather more than what we would have initially thought. So very good evening to one and all present. It gives me immense pleasure to extend a very warm welcome to all the members to virtual CP meeting on Sustainability Reporting Maturity Model, organized by the Sustainability Reporting Standard Board of ICAI. There is a maximum limit of 2,500, and I'm happy to share that it's been packed to capacity. There are 2,500 people who have registered for this program. And today we have a very experienced panel who will share their insights and perspective on this very crucial topic of sustainability reporting maturity model. Friends, we know that the past 2 or 3 years have seen a tectonic shift in the way companies view their purpose. The idea that a company's only role is to deliver financial return to its shareholder has begun to expand into the more inclusion notion of long-term value is the focus now. And COVID-19 has exposed and widened existing fault lines of economic exclusion. The Global Risk Report 2021 highlights that economic risks continue to threaten. They remain top risk by likelihood and the impact in this year's survey. In fact, out of the top 10 risks anywhere, you will find 7 risks will be climate or the environment-related risks. Companies find themselves having to adapt rapidly to this changing environment. In the past year, for example, the number of businesses, cities, states, and regions announcing pledges to cut their carbon emissions to net zero has doubled. This is not just about doing the right thing. It's driven by a clear-eyed appraisal of the risk and opportunities global businesses now face. Sustainability disclosures are important because it builds trust and credibility, both vital to furnishing a company with its social license to operate. However, non-financial information is often more difficult to measure and access compared with the financial information because the data can take many different forms. In fact, this morning also at the Security Exchange Board of India meeting, we were discussing that, what kind of parameters can we build around the concept of social audits. It's often the case that the information is qualitative. These difficulties should not limit the use of non-financial information because this is very relevant information for all the stakeholders. The number of reporting provisions globally have increased tenfold in the 25 years since the 1992 Rio Earth Summit to about 1,000, indicating the complexity and the need for such reporting. I'm extremely happy to share that the MCA Committee on Business Responsibility Reporting gave the new comprehensive framework for business responsibility and sustainability reporting. We call it BRSR. And the formats have been developed for all companies, listed as well as unlisted. However, there is a light version for the smaller companies. Now, by providing a score to the information disclosed as per these formats, we can develop a comparability index as well as assess the maturity level of sustainability reporting. And this is exactly what your Sustainability Reporting Standard Board has attempted. In the board meeting, which was held yesterday, the board has approved a sustainability reporting maturity model on a 0 to 300 point scale with 4 maturity stages: 0 to 75, 76 to 150, 151 to 225, and 226 to 300. And if you really see that out of the new BRSR, this is divided into the mandatory disclosures and the leadership disclosures. And we have assigned 75 points to the leadership disclosures and 225 points to the mandatory disclosures. So a company can fall into level 4 only if it is doing at least some of the voluntary leadership disclosure. The objective of this webinar is to put forward the BRSR scoring and the sustainability reporting maturity model among the members and the other attendees. You'll be happy to know that India is the first country to develop such a comprehensive model. It's really indeed a pleasure sharing that this is the first of its kind initiative in the entire world. As chairman of the board, I would also like to briefly mention the initiatives taken by the board. SRSB has undertaken various initiatives since its formation on 12th February 2020. I'll just name a few. development of thought leadership research paper on integrated reporting in India, jointly with the IIRC on integrated reporting in India. This is a work in progress. Developing a publication on sustainable development goal with an objective to create interest and develop understanding of members towards the same. And work on SDG 1 to 5 has already been completed. Developing the background material on the BRSR, which provides guidance on disclosure of qualitative information, assurance aspects, and adoption of best practices. The board has also finalized the first ever assurance standard, SA 3410, on assurance engagement on greenhouse gas statements. And this has already been announced and posted on the website of ICAI. We're also developing a corporate film on simple steps to make our planet sustainable, to create awareness on environmental issues among the members and other stakeholders at large. Recently, we did a Bhumi Pujan of one ICAI building in Rohini, Delhi, and it's going to be a green building, meeting the toughest of the norms, and we are aiming for a 5-star rating for that building. So we are, also implementing what we advise to others. And with a view to develop interest of members in the Sustainable Development Goal and identify champions of SDGs, we issued UN Fun Quiz brochure and invited suggestions from members on how to reduce carbon emission. I'm happy to share that we awarded certificate of appreciation to 7 members who gave their valuable suggestions. The board has successfully conducted 2 batches of 5-day online certificate course on BRSR, and 3rd batch is scheduled to commence on 5th of February 2021. This will be a major step towards capacity building. Board is also working on the initiative which can be taken based on World Economic Forum's white paper, measuring stakeholders' capitalism towards common matrices and consistent reporting of sustainable value creation, because now the focus is on triple Ps: profit, people, and planet. And board has sent comments on the consultation paper on the format for BRSR to SEBI. And board also submitted its comment to MCA and trustees of the IFRS Foundation on the consultation paper on sustainability reporting. Besides, the SEBI formed working group on social stock exchange, which submitted its report on modalities for creating a social stock exchange. And myself, along with 3 of my council colleagues, are actively contributing to the social stock exchange concept. We also finalized our recommendation on aspects related to social auditor, information repository, assurance framework, code of conduct, financial reporting standard, and the regulatory authority for social auditor and the information repository. Niti Aayog, in collaboration with the United Nations Residents Coordinator's Office, is working on the project titled Private Sector Integration of SDGs, and I happen to be a member of that expert advisory group with Niti Aayog. We also organized a number of webinars during the year, namely Journey Towards Integrated Reporting, which was attended by 1,100 members, World of Opportunities for Chartered Accountants in Sustainability, global webinar on BRSR with launching of the certificate course, and the board has co-hosted the online regional focus group for India to discuss the consultation draft of the revised IR framework along with CII ITC Center of Excellence for Sustainable Development. We also organized a global webinar, COVID-19, Need for the Strategic Focus on SDG, Making Our Planet a Better Place to Live, and Emerging Opportunities for Chartered Accountants in Sustainability Reporting. I sincerely believe that the accounting profession has a critical role in sustainability reporting, and we will continue to build our capacity in this. And I urge my members to upskill themselves in this emerging field, which is the future of corporate reporting. Now it's indeed a pleasure to invite Dr. Monamita Nandi and Dr. Suman Lord to make a brief presentation for about half an hour on this entire concept, on this entire model, and which will be followed by a 75-minute panel discussion. Dr. Monamita Nandi is a reader in accounting and finance and director of internationalization, exchange coordinator at the Brunel Business School, Brunel University, London, UK. She is the co-chair of Southeast Group of British Accounting and Finance Association and acts as an expert at PMI of the European Accounting Association. Her research attracted external funding, and her collaboration with business allowed the firms to take progressive strategic decisions. I'm really thankful to you, Dr. Monamita Nandi, for working with us in developing this model. And she's accompanied by Dr. Suman Lord, who currently serves as the chair of the Research Ethics Committee of Accounting and Finance Economics and CEEDR at the Business School. He has more than 10 years of research experience, particularly in financial econometrics and data analysis. Recently has worked in the area of finance, accounting, and environmental policy, which are affected by the COVID-19 pandemic. I'm thankful to both of you. And besides, I also welcome all my panelists, CA Pankaj Chadda, CA Rohit Nair, CA Sandeep Gupta, CA Hemant Sabharwal, and Kedar Shirali, who will be shortly joining us. Over to you, Dr. Monimita. I expect maybe you take about half an hour, and then this will be followed by a panel discussion. Thank you.
Thank you, sir. Thank you. So I'm Monimita, as Dr. Sanjeev mentioned. I'm Monimita from Brunel Business School, and I would, on behalf of my research team members, I would like to thank SRSB, especially Chairman Sir, Vice Chairman Sir, and his team in giving us feedback to improve our scoring model throughout the process. And today we will present the scoring model along with the sustainable reporting maturity model developed by SRSB. And this scoring model we developed as a teamwork. We have done it, and so I would like to thank my team members, Dr. Suman Lo, Dr. Punita Goel, Dr. Rupali Mishra, and Dr. Nandita Mishra also. So they all contributed a lot in developing this, and we would like to thank all the participants here and who are watching this session over YouTube. And thank you for your time and patience. And if you have any comments, any feedback, please reach us. And we are very eager to work with the EU and SRSB, ICAI, and so that we can bring a good change in this whole society, and we can develop a better future for all of us. So I would now hand over to my colleague, Dr. Suman Lord, who will start the presentation, and then we will quickly go through our model, and we will expect some questions from you, and also followed by the panel discussion. Thank you. It's over to you, Suman.
Hello, everyone. Thank you, Mr. Chair, Dr. Sanjeev Singhal, and all the honorable members of SRSB and ICAI. When I was starting, I took a pause to say that what should I say? Hello, good morning, because it is morning here in the UK, or afternoon or evening. Living in this country over 10, 15 years, I understood that as soon as the sun sets, then we can say good afternoon. And when the night comes, we can say good evening. But why I'm saying this? Because ultimately, these are all qualitative. Afternoon, morning, or good evening. As Sanjeev sir was saying that, you have a new building and you want 5-star rating. You don't want that this is the best building in the world, or this is the outstanding, but you require a rating number 5, and that is a star. So here lies our main issue, that the sustainability reporting should be there, the disclosure should be there, but how do we know that in which way we have some numbers so that stakeholders can understand? So the next slide, Monimita, and thank you, Monimita, that for leading this. So in our presentation today, we will talk about very briefly, as Sanjeev sir was already saying all about the scoring and BRSR. So we start with, again, a very, very brief introduction of BRSR, scoring models, and we have some discussion, a little discussion about the existing standards. Then we move on to our proposed models, and we have some backup with our theoretical framework. And finally, we discuss about the proposed booklets on sustainability and as well as the low carbon and circular business. So again, repeating the same thing that that can create the environment that we were trying to discuss today is this is a great initiative from India, my country, your country. So where we initiated a very, very strong reporting framework. However, until 2018, that framework was working, but there was a need to make it much more comprehensive. And then with enormous effort from ICAI and SRSP, you have come up with this business responsibility added with sustainability word into it, and that becomes BRSR. And we have almost a full-fledged reporting standard, reporting framework that we can see. And it looks like four different letters, but there is an enormous effort from the team members of SRSP and ICAI and other researchers. Then why this enormous outstanding effort was there? The main aim was to develop a comprehensive and comparable disclosure for all types of companies. So it should be all inclusive so that they can understand easily, and in which way they can also connect with their stakeholders. The other objectives would be that it should be a single source. So it should be a very, as Sanjeev Sir was saying, it is a light version, so easy to understand for everyone. And BRSR should align with the global trend, which is also necessary. India is not confined with only the economic and financial boundaries. So it is going outside, and other companies are coming also in India, which is, India is a very, very big and powerful country nowadays. So we need to have a framework which is globally recognized and understandable for other companies outside India. And in that way, India needs to become and wants to become and is becoming the leader in SDG achievement, which is an outstanding initiative of its own. So where does our motivation come from? We had that challenges that when we had that responsibility reporting BRR, and then replaced by responsibility and sustainability reporting. And when we compare that with other international reporting scales, we saw that there is a very difficult situation where you can compare the Indian companies with international companies related to those sustainability parameters because of lack of comparability again. Materiality assessment, which is again very, very buzzwords in sustainability reporting these days, and then in terms of the accuracy level in the materiality assessment, we need to move forward, and also if we have got those weaknesses, what about the assurance providers? They would say, oh, I don't care about this, let's move on to another country. So in that way, we don't need to be moving behind, rather we need to be the forefront leader in that initiative. Therefore, we need a scoring mechanism. And what is that scoring mechanism? That enhances the compatibility and comparability of the existing BRSR that has been with all of us since 2020, with the most acceptable model of the world. So it should have all the qualities, all the points that has been covered by GRI or IR or other framework and standards. The other important thing that I was starting with, that the quality needs to be converted into quantity. That afternoon, evening, and morning that I started, rather than if I say the time, this is at this moment, this is 11 o'clock in the UK. And then you understand that, oh, this is morning then. And we are going close to the noon. And in the same way, when we have a quantity, an identifiable, in econometrics, we say observed, measurable number, then it would be easier for us that we can see that we have a number, and then we need to move forward to another number, higher number. And each of those higher numbers represent a higher quality. If I take that same example, we have a building and we need 5-star rating. Now, if we think about the building has got 4-star, therefore we have a motivation. No, we need to achieve 5-star. The same way, Monomita will explain that the model, that where you are, a company is in its different levels, and in that level you have to, and if some company is at lower level, the company automatically will have its own motivation to move up to another higher level. So that's why the qualitative information needs to be converted into quantitative information. It is very easily implemented form, and it considers which is needed, the materiality for each stakeholders. However, it is mainly in the European countries, and it is not also focusing the climate related metrics, which is nowadays again a huge concern for all of us, that climate related or environment related consciousness. On the other hand, we have again IR. Again, it supports value creations for companies over short, medium, and long term. But then again, there is a problem that what about those scope 1, scope 2, and scope 3 of greenhouse gas emissions? We were working on carbon disclosure project, and we saw that the company called CDP, Carbon Disclosure Project, they collect by survey all the information about the carbon emission by companies, and they categorized based on the information they got related to the direct or indirect emissions of carbons. And we saw that when it comes to a developed market, the information is quite transparent, and when it goes to underdeveloped country or developing country, then companies, they try to hide the indirect emissions of carbon. And then when it comes to that point that, okay, you have to have this integrated reporting and you need to just disclose all. Therefore, there are a number of academic papers where we find that company shows something but does something else. So it is again not comprehensive and transparent. Now I hand over to Monomita to again now go through the models and explain what we have here. Monomita, over to you, please.
Okay, thank you. Let me. Okay, thank you very much, Suman, for giving an overview about what is happening in this with this BRSR framework. Now, let me talk about the principles that the BRSR, why we are saying to follow BRSR, because the principles which are commonly the terms that we can see commonly used by different sustainability frameworks are comparable, verifiable, timely, reliable, then understandable information, and sometimes they say that it is quite complete. And in particular, if we look into SASB and IR, the SASB consider objectivity, so they are more focused on objectivity, whereas IR is considering more forward-looking information and conciseness as the key principles, and these are the key principles based on what they develop their framework. Now, why we are proposing this scoring? If we see that in KPMG report in 2020, then we can see that in different region, like in America, in European region, then Middle East, and in Asia, we can see there is a high trend of reporting non-financial activities, and it went up to 90% in states, then 77% and around 77% in Europe, and 59% in Middle East, and also 84% in Asia. Now, the question is, when we were developing this scoring model, we were very keen to understand what is the situation of the Indian companies. We have seen great initiatives by ICAI, SAB, then SRSB, that they are doing so much on this sustainability issues. But if we see the statistics, then we can see that in 2017, 99% companies from India were reporting these sustainability issues. Whereas in 2020, as per KPMG, that it went down to 98%. So the question is there anything that is not motivating the companies to do sustainability reporting, whereas other countries, other companies are doing it, like increasing the percentage of reporting? So that was one of the major motivation, along with the motivations mentioned by Suman, that that was giving us some hint, and that actually motivated us to understand what is the problem. And if you see the recent GRI, like the 2020 report, you will see that they are quite focused on, as in the previous slides we were saying, that mostly the European companies are keen to produce their sustainability report based on GRI, and especially in 2020, GRI accepted the three-pillar model by European Union. So, but the problem here for the Indian companies to be more comparable, more verifiable, that they need to produce so many reports, like one CSR report, as you know, that the 2% and to 3% profit should go to a separate fund, and they have to show that the top 1,000 companies needs to show that they are doing CSR activities. So that's a separate report. Then again, the sustainability other parameters comes under other report. So I think that is one of the reasons that Mr. Shantos from a partner KPMG India was saying that we need to improve the quality and depth, and I think he was referring to BRR. So these principles were improved, and BRSR was developed based on these comments and these world standards. So after looking into other existing framework, we can definitely say that BRSR is a leading one. It is a comprehensive one, and you can see all the features mentioned under these principles, like comparability, verifiability, reliability, and complete information. You will find everything in BRSR. So then we came to our proposed model, that how to support this BRSR initiative by developing a scoring for the whole model. So we took the BRSR complete model. We did different comparison with the existing principles, existing models around the world, or the framework around the world. And we came up with 300 scores following the BRSR framework. So we followed the BRSR framework, which is really comprehensive and really an excellent initiative by SRSB. And then we went with section A, and which is more about general disclosure, and we came up with a total score of 37. Say for example that in parameter 22A and 27, you will see that we mentioned that if any company is doing CSR as per section 135, they will put 1 for that. And if the responsibility statement of CSR committee, they are producing that, they will put 1 for that and 0 for none. But don't think that we are only giving binary, we are doing the binary coding. We used other coding mechanism too where appropriate. For section B, which is related to management and then process disclosure, the total score became 23. Like for example, where the policy extended to value chain partner, that how the company is involving their stakeholders, and the translated policy into procedure, and are they communicating with the stakeholders properly to help them to take informed decision, and whether there is a transparency, and if they are sharing their details with the stakeholders, are they translating this policy into procedure. So we code them with 1 and 0. So these are some of the examples under section B. Then the most interesting thing under section B are the 9 principles proposed by SRSB in their BRSR framework. So we took each and every principle, and like principle 1, we came up with a score 23, principle 2, 30, principle 3, 48, principle 4, which is 5 only, principle 5, total score 14, principle 6, 62, and followed by principle 7, which is 3, and principle 8 and 9, 24 and 31 respectively. So when you will see our scoring, you can understand that for every principle. Now, why we took this principle scoring, it is really important because under every principle, there are subsections. So we score each one of them. So it is a very clear scoring for the companies to understand where they stand and how they need to improve. Now, when I'm saying that where they stand and how they should move forward, then I come to this proposed sustainability reporting maturity model, where SRSB kindly took our BRSR scoring and they mapped that with different explanation they expect from the companies to come regarding this BRSR, because this is going to be a mandatory thing for the companies. So in level 1, that is the forming and initiation stage, where the BRSR score can be up to 75, which it was explained by Dr. Sanjeev that these are the leadership scores, and then in every level you will have some leadership scores and some mandatory scores. So the advantage of these different levels are that it's quite unique, because if you want to be a leader, if you see the previous framework, some of the limitations were like, if I see the GRI, there is a benchmarking system, and in the benchmarking, the companies are not disclosing about, they are not considering their stakeholders in disclosing their leadership position. So they are mainly focused on leadership attributes rather than other mandatory attributes. And as everyone is not considered in this whole model, so we cannot say that they are taking care of the stakeholders properly. So this is one of the major problem with the existing framework, which we overcome here. Now you can see I'm not reading out. So in level 1, it is up to 75, level 2, 76 to 150, level 3, you have to reach a score of 151 to 225. And if you are really efficient in doing achieving all the aspects, more or less all the aspects, so you need to get a score of 226 to 300. Now to reach that level 4, you really need to do lots of hard work regarding SDGs. And here you can see that if I'm in level 2, I'm not saying that I'm going to you are doing a crime. You are trying your level best. And how we can motivate the companies to move to level 3 or level 4, we are giving some hints that, see, in level, to reach level 3 from level 2, you need to do something, and these are the things that you can cover, and they can clearly understand that to be in that score band, what are the activities I need to do and how I need to do it. So like every time, we don't need to change from the beginning, we can develop. Like for example, I can say that if I'm a company in level 2 and I can see that to reach level 3, I need to diversify my board. So then I can build up my strategies around that, and I can understand, okay, I can bring in more qualified chartered accountant on my board, and I can recruit more female candidates for my board. So these are some examples I'm giving. So when you will see the model, you will get an opportunity to go through the detailed model where you will understand how you can develop further. Now, what is the what is the motivation, or why we think that this scoring could help the BRSR to achieve their objectives? Because it covers all sections and principles of BRSR. So BRSR is drawn very carefully after considering many factors, many situations, and then getting comments from the business leaders and the head of the sustainability reporting, global reporting. So they are excellent people who came forward to help SRSB to say that, see, you can do it like this way and that way. And then the expert people from SRSB implemented that. Now, we followed completely the BRSR, and we focus on level 1, level 2, and level 3 of maturity can be defined based on range of scores. So if as Suman was explaining, that when we have any quantitative machine readable information is very easily understandable by the stakeholders. And for that, even we don't need a separate stakeholders report like what GRI, SSB and SASB, they are proposing, that we might not need that in India if we can bring in everything in this one BRSR framework. So here, as Chairman Sir was indicating, that we focused a lot on leadership indicators. So anyone cannot manipulate, like they cannot say we are doing this, they have to prove, and we got a scoring mechanism to measure. So that is one key indicator of materiality, we think, because that's giving a very clear indication to the stakeholders what to do, what not, whether they should go ahead with this company or not. So in every principle, the company will have to achieve sufficient score to reach the leadership target for a particular principle. And then we supported this need of scoring with our theoretical model, like natural inventory model, which can help any company to understand that, okay, I'm in level 1 or level 2, and how I can reach my optimum natural inventory. And that would give confidence among the users of this BRSR, that how these companies are performing at different level. And we also considered the actor network theory, where we say that, okay, to earn more profit, you need to do something for the society. So you have to consider the human and non-human activities together. So based on this scoring, we can say that that could help to develop a sustainability booklet very nicely, and where we can suggest IFRS about this decentralized approach. So they are now asking people and different organizations and different country leaders that whether they are willing to go in with a decentralized or centralized approach. So we can say that we are doing really good, and we are sure that we will do further good. So we want to follow the decentralized approach. So these are nothing to do with SRSB or ICAI. These are our research findings, and this is completely our understanding. And the scoring can show that there is further consistency and global comparability in our features. And we can make some addition to paragraph 31 about the level of fundings. And India can say that, okay, as now we got this scoring mechanism, scoring model, and our strong BRSR, so that's why they are making it mandatory. So if it is mandatory, we need certain time to see how the companies are responding to that mandatory requirements. And to be consistent with IFRS, is there any need to be more focused on climate related disclosure? So we can say that we have these climate related factors in our scoring model, in our BRSR model. So we don't need a separate climate report, because when you are asking too many reports from a company, they are quite confused, and they feel quite bored in filling up all those forms. So we are trying to bring in everything in one report, and we need to focus that we are not considering climate related risk only. We are more concerned about environmental factors. So we are not developing a risk model or risk mitigating model here. And we can show that if we use this scoring model, we can deal with the materiality issues really nicely, and we can enhance the assurance provider, and we can create an environment where assurance providers will feel more confident to come forward to support the company's initiative in sustainable reporting, and which will also help in developing a low carbon and circular business environment. And like, for example, we included this greenhouse gas protocol classification, and we can use carbon emissions from operation, perception of employees, which is already there in the scoring mechanism. Then how we are supporting our supply chain regarding carbon emissions, and then business travel energy. And we can use different parameters like direct emissions from burning of fossil fuels to biofuels, indirect emissions from consumption of electricity, and indirect emission like business travel, consumption, waste, and other thing. And the scoring matrix could be used to find a percentage of carbon emission which is offset in current year compared to total emission intensity and total of any indirect emissions. And we can use for possible metrics for energy, like energy consumption, energy from renewable resources. These are already there to some extent, but if for comparability purpose with other businesses we need further information, we can easily use our scoring mechanism, and we can make little bit of development in this voluntary and we can make some voluntary report on that. So the scoring metrics could be percentage of carbon emission, which should be offset in current year, total emission intensity, and total of any indirect emission. So all those things could help us to help the businesses to develop a circular business, and where they can use the resources, and the metrics could be how much paper they are producing, their water supplied, etc., and whether how much waste they are doing. And the metrics could be proportion of recycle, reuse of product, landfill, etc. So this is altogether our explanation about the whole scoring model supporting the BRSR and our maturity model, which we developed along with BRSR. Thank you very much.
Thank you very much, Dr. Monamita Nanji and Dr. Suman. Thanks. This was really insightful. Now, based on this model, now we will like to go ahead with our panel discussion. And I have with me today CA S.K. Gupta ji, Director of Finance, Indian Oil. He has more than 31 years of experience in Indian Oil, and he has experience of handling almost the entire gamut of finance and accounts activity in various capacities at the 3 refinery units in North, West, and Northeast India for 20 years. Besides, he has spent 8 years at refinery headquarters and was primarily responsible for hydrocarbon accounting and crude oil payments. He actively supports the initiative of ICAI and really believes in building a workforce comprising the chartered accountants. Indian Oil employs more than 500 chartered accountants and hires the brightest of them. They are the first ones to hire the rank holders in Indian Oil. I welcome you, S.K. Gupta ji, to this webinar and sparing your valuable time. I know today was your board meeting and the analyst call also. I'm extremely thankful that you've taken time to join us. Then we have CA Rohit Nair. Rohit is the CFO of CARE India. He's an alumnus of Shriram College of Commerce. We are batchmates, 1994 batch. Rohit is a chartered accountant and company secretary. Rohit has over 2 decades of multifarious experience in leading and executing business growth strategies and transformation initiatives through collaboration with a cross-functional team. He has served for long at Dell, and then finally he decided to move to the NGO sector and is currently the CFO of CARE India, which is a part of the Global Care Confederation working in over 100 countries. He's also a part of our technical subject matter experts of the Social Stock Exchange. Thanks, Rohit, for sparing your valuable time here. Then we have CA Pankaj Chadda. Pankaj is a partner with SR Bartleby and Co. He's a practicing chartered accountant and he has more than 28 years of experience and has worked on various work streams and projects in India and overseas undertaken by the clients towards their financial reporting, transformation, post-merger integration, fundraising, digital, etc. He very actively participates in the programs of ICAI. He was there in the program when we did on COVID-19 accounting and auditing issues, which was attended by more than 25,000 members across India and overseas. Thanks, Pankaj, for taking out time. I know this is a busy schedule because of the quarterly closing, but thank you so much for being here. He's accompanied with CA Hemant Sabharwal. Hemant is also a special invitee of our Sustainability Reporting Standard Board. Besides, he's a partner with Pricewaterhouse. He leads the sustainability assurance practice in the firm, along with providing service to several donor agencies and the international NPOs. He brings in over 24 years of experience in providing several audit or assurance-related services. On ESG front, he has diverse experience in the reporting and assurance space in areas such as sustainability assurance, integrated reporting, CDP reporting, business responsibility reporting, and waste management reviews. Thank you so much, Hemant, for being here. And we have one more panelist, Kedar Shirali. Kedar is a global head investor and analyst relations in TCS. He heads the investor relation and the analyst relation function globally at TCS, serving as the company's spokesperson to the capital markets and to the industry analyst community. He holds a bachelor's degree in mechanical engineering from Bangalore University and is an MBA in international business from the IFT New Delhi. I'm also happy to share that TCS won the Integrated Reporting Award from ICAI. This function was recently held. So many congratulations, Kedar. When you were here with us in the last program, obviously, this was not a public information. So now I can share that. So many congratulations for that. So let me start with Rohit. Rohit, if I can ask you this first question, how important you think is to provide a score to BRSR? This is the maiden attempt by any country, and to measure the maturity level of BRSR reporting for organization. What's your view on that?
Yeah, sure. Thank you, Sanjeev ji, for having me here. Thank you to you and your team, and very good afternoon to all the distinguished panelists and everybody who's tuned in. Well, at the outset, I would really like to commend these pioneering efforts towards this path-breaking initiative. So many congratulations on coming up with this scorecard approach, first in the world. Well, I believe when we are building a business, a team, or any kind of system, we really need ways to understand how well we are doing. So we want to be able to look at our performance and set some base standards which have to be met, and then contrast those with the best practices. But that's why most of the corporates also have various people and performance metrics like KPIs, etc., through which they are able to evaluate the performance. However, these metrics are often hard to apply to qualitative data, and that is where I think this scorecard and maturity model approach is an incredibly useful tool. As I see the maturity models, it's an evolutionary process towards fulfillment of a desired target. So it really encourages figuring out what needs to be done. And the key thing here is the focus on performance improvement. I think that's what, as Dr. Monamita and Dr. Suman also highlighted, how the scoring pattern will take companies from one level to the other, and that is what really instills in a push to really ensure that a premium is placed on these compliance so that the company can move ahead in the maturity model. And on top of it, by providing a scoring and this approach, it really provides a common framework and a common language to really help communicate with our external stakeholders who are, as you said, integrated reporting is the norm nowadays, and various external stakeholders are constantly trying to compare and evaluate the business entities. So today's consumer really care about the mission and purpose of the business, and having this scorecard and this maturity model approach will really help share that story with the outside world. So really commendable.
Thank you, Rohit. Thanks for these views. Moving on to Pankaj. Pankaj, today we talk about long-term value. Some people talk about ESG. And, at the same time, there could be some people who question that, why should organizations shift from profit to people and planet as well? In your opinion, in your experience, how important are the sustainability considerations for success of an organization today? And in a way, why should an organization focus on sustainability? Do you think some people think it's only an expense and there are no benefits. As a practitioner, what's your take on that?
Yeah, thank you very much, Sanjeev. And I think thank you very much for your very encouraging words at the start, welcoming all of us. I think it's always a privilege to work with the Institute, and more so for such a strategic initiative that is being led by you. I think it's kudos to you, and I think there is significant change that you're seeing and likely to see in the coming months and years on this very, very important initiative. Coming to your question, I think very clearly, you actually spot on. I think when you start talking to the companies, and if I go back a few years, there wasn't enough sensitivity to this. There was more reactions from the companies to say this is merely for a certain class of stakeholders, not for anyone. It's not useful. It's eating away our profits. It is an expenditure, etc., etc. I think if you start looking at it now, and I'm not only talking about 40 odd companies that are reporting in India, or when you go to UK or some of the other mature markets where you see people are reporting pretty extensively on this. Now there is pretty clean, clear demand by stakeholders, including customers, investors. In fact, today, when they look at businesses, they look at it with these parameters from a long-term value perspective. And I think you covered that briefly, but I can tell you, I think in the organization that I work with, we look at it from so if you look at very, very short-term view, there is obviously a little bit of benefit. In fact, I would say even there is a benefit because, so for example, if you have to look at energy efficiency, if you have to look at gender neutrality, if you have to look at some of those initiatives that emerge out of the sustainability consideration, there is clearly a benefit on short term as well. Even if it's not, I think on a medium and long term, it's a significant benefit, whether it is reflected in how your cost of capital comes down, how your cost of debt comes down, how you gain that extra reputational value. I think all of these are matters which are pretty clear. I think specifically, if you start looking at the ESG rating forums like Dow Jones or Bloomberg, etc., you now know that investors are looking at all of these matters before they start making or taking decisions on investments. So I think when we talk to our clients and our investors, both classes of people who will come to us for different consultations, you actually see there is a pretty clear focus on this. And I don't think it can be now said that this is merely an expenditure only. Just one other point I would, so I was reading this report by Ernst & Young, which actually said they will go carbon neutral this year, and then they will go carbon negative 2025. It's a service industry. And when they are making these comments, there is obviously much more value that you would see in any other class of companies, which actually have much bigger and larger agenda.
Thank you, Pankaj. In fact, you have answered my next question that, what is that at the level of a firm, it can be done. But that's really heartening to note. Moving on to Mr. Sandeep Gupta. Sandeep ji, I know that Indian Oil places a lot of focus on integrated reporting. And, but, the product that you deal in, people think it's oil, there is no distinction between the oil supplied by one company and another company. What motivates you to do the integrated reporting? What is the board thinking around it? And do you think this scoring model is going to help you in further strengthening the integrated reporting?
Yeah, thank you, Sanjeev. And my greetings to all the participants here and those attending through web. Thank you for inviting me here. Indian Oil has been reporting its sustainable initiatives since last 15 years. And in fact, we were the first PSU to start the integrated annual report publication since 2016-17. To the best of my belief and knowledge, we are the first public sector undertaking to do so. So there has been an emphasis on sustainability and business responsibility from ages. Yes, you are right. We are dealing with a product which is considered to be polluting or non-environment friendly. But yes, that is the nature of the product we deal in. So our initiatives are to ensure that to what extent we can contribute towards reduction of maybe the emissions, the harmful emissions to the environment, and mitigating the CO2 impact which is there because of our products. So you would be glad to know that we spent about 17,000 crore on installing the BS6 facilities across our refineries without any economic return on those projects. And now the quality of our BS6 motor spirit or diesel is as good as the emissions from that is as good as the emissions from natural gas, which is considered to be the best fuel as on date. So these are the initiatives which we are taking. But then, yes, we are conscious that we are in a business where we have to produce products which do emit CO2 emissions, which give rise to greenhouse gases emission. And to counter that, we are taking a lot of initiatives. So now we are in a big way into natural gas, into biofuels, into electric vehicles. Though overnight, neither the consumption of the petroleum products can go to nil, nor we will be able to do that. So we have to meet the demand of the market, and we will continue to produce that. We have to see that how sustainably we are able to do that, do the service of the demand which is there in the market, and take other initiatives which perhaps negate the impact of these GHG emissions, which are there for sure. So there is a huge level of consciousness within the company at all levels, whether it is board or the workforce. And we are working very closely even with our channel partners. And I'm glad to inform you that most of our retail outlets, more than perhaps 2/3 of our retail outlets, already are solarized. That means they are provided power through solar powers. So we are working very closely with our channel partners, business partners, to see that the effect of our GHG emissions is mitigated in some manner or the other.
Thank you. Thank you, Sandeep ji.
Yes, your last part of the question was that how this model will benefit us. And definitely this will be is an extremely good initiative to begin with, at least. Like we benchmark our refineries or pipelines on Solomon benchmarking index, where the various companies are put into 4 quartiles. And that provides a great impetus to us to work on various parameters to improve from one quartile to other on various parameters. And definitely such type of model also will provide great motivation to every industry, every company to improve its performance. Till now, the reporting of BRR or integrated audit, integrated annual reports are more or less subjective. And you cannot ascertain the level of maturity of an organization based on such reportings. But this model will definitely provide some model to assess that and will provide great motivation for the companies to improve. However, as of now, I have preliminarily gone through the model. It is, I think, as Professor Nandi perhaps was also hinting, we can include certain more elements to make it more objective, maybe in line with our COP21 commitments, national commitments on COP21, based on reduction of maybe emissions or otherwise.
Thank you. And we would certainly be sending it to various companies for their comments. We'll be exposing it publicly. We'll incorporate these suggestions received. Moving on to you, Kedar. First of all, many congratulations for receiving the award from ICAI on integrated reporting. And I know that you are the force behind it. How does this model, in your view, fit within a corporate reporting system? You have a very evolved, very mature system of integrated reporting. Do you think it's going to help you further? And in general, what's your view that what is the present level of maturity of the companies who are doing integrated reporting and maybe of the companies who are not doing the integrated reporting in your experience?
First of all, thanks for having me, Sanjeev. This is always a pleasure to be part of the distinguished panel discussions that you put together. So great to be here, and good afternoon to all the panelists and to everyone who has joined today's session. Coming to your question, see, first of all, let's be very clear. This is a reporting maturity model. This is not a sustainability maturity model, right? You're really measuring to what extent a corporate has address the different disclosures that the BRSR has called for. So this I would actually see as analogous to the GRI grade that the GRI folks give based on how many of their metrics you have completely reported. So they too have a if I recall correctly, a 3-tier structure, A, B, and C. So I think there are about 70-80 companies in India at the moment who disclose their sustainability metrics as per the GRI framework. We have been doing that since 2006. So it's been 14 years of publishing a sustainability report as per GRI. We get it externally assured as well, and so it has been a GRI A+ ranking for the last many years now. And I would think most of the leading companies, especially those with a global footprint and who have significant shareholding by global investors, would all be doing this. So they would, I think, readily map to the level 3 maturity that Dr. Nandi just spoke about. Because see, ultimately the metrics that are called for in BRSR are not very different from the metrics that are there in GRI. I mean, this is definitely an improvement over the BRR itself, but metrics wise, it compares more or less with GRI. I couldn't spot too many things which are very different from what GRI asks for, and so I think those mappings measure readily. I think the biggest value of having this indigenous maturity model is to enthuse the larger set of corporates in India to start reporting their sustainability performance, which has not been happening so far. So there is always a debate, whenever you look at SEBI consultation papers, there is always a debate about the value of prescriptive solutions versus recommendations and so on. So I think some of these get a greater impetus when there is a prescriptive approach to it, and by making it mandatory, I think there will definitely be of immense value to the larger stakeholder community, both the local communities, shareholders, and the world at large. And so in many instances, these metrics would already be there. I can't think of any business today which would be running a business without measuring their energy consumption or their water consumption or their all the derivative metrics, manpower related, and so on. It's just that so far they've not had any need to report that in a structured fashion anywhere. I think this BRSR obviously brings that to the table and forces people to start putting numbers in black and white. And I would think a lot of the majority of the ones would really come into the level 2 category. There would also be a lot who may not want to disclose, in which case they would fall into the level 1 category. So you'll have a broad spectrum of companies in this range. Some of them deliberately not disclosing versus many who may not be tracking, and so you can't really have a generic view there. But like I said, this is a great beginning. I think once you start on that journey, I think there will be a natural impetus to move to higher levels of maturity, and it will be good for all stakeholders concerned when that happens. Oh, and the other part of your question was on where it fits into the corporate reporting framework. Like I said, again, in the case of companies like ours, where we have been doing this for a very long time, all of this is already part of it. The MIS captures, we have in India, altogether globally, we have about 195 or 200 centers. Across every center, these metrics pertaining to energy, pertaining to water consumption, all of those are collected on a monthly basis and collated. All other data is largely centralized. So manpower data, financial data, all of that is centralized. Likewise, the CSR activities that we do across the world, all of that is overseen by a central team sitting in India. And so we have a running visibility of all these activities across the world and our footprint across all three dimensions. And so it readily, this is where every corporate should get to. We have been doing this for a while, so I would think we are a little ahead in that respect. But I would think this, this model will actually put other organizations also on this similar journey, and I think it will become gradually part of the holistic approach to reportage that really one requires to, to build the foundations of a business that will last the next 20, 30 years.
So thank you, Yadav. That's a very encouraging, viewpoint. Moving on to you, Heyman. Heyman, you've been part of the team which has developed this model, and you've been part of the deliberations also. But how it will help the companies to benchmark themselves? Do you think that the companies are going to volunteer it? And also, what is the role of chartered accountant? Because you yourself have been an assurance provider as well. What is the role that you see for chartered accountant in this whole business responsibility and sustainability reporting, including this model which is there?
Sure. Thanks, Sanjeev. Good afternoon, everyone. And thanks to you, Sanjeev, Durgesh ji, and SRSB for giving me this opportunity to present my views on this sort of important development on the ESG front in the country, that is the BRSR model and the sustainability reporting maturity model that is being or has been developed by SRSP. I would also like to take this opportunity as a special invitee to SRSP to congratulate the SRSP in their efforts and the tremendous progress that has been made in this area in the short frame of time. Coming to your question, Sanjeev, I think, as you mentioned earlier, I think chartered accountants can play a very big role in helping companies in their sort of ESG journey. As I would say, they upskill themselves on ESG because we still know that amongst the large pool of chartered accountants in the country, there are only a few people who work in this area. So as we move along, I think there's a lot that we can do. I think whether chartered accountants are working with companies in relation to financial or non-financial audit or ESG reporting, they can always play a role in generating awareness of how and why ESG reporting is essential. At the same time, educating themselves on it. Companies need to realize that ESG reporting is a way to tell their story to everyone. It's a way to build the trust in the society. It's a way to streamline their processes. And also sustainability reporting gives the companies an opportunity to manage their sort of risks in some manner. I think important for companies to realize that investing in sustainability can drive innovation, redesigning products and services to meet environmental standards or social needs offers new sort of business opportunities. And when we talk about reporting, somewhere we need to recognize that data quality can get compromised, especially when we talk about sustainability reports. I think because it doesn't still draw the same focus as financial reporting, doesn't have, let's say, frameworks or controls around it, there are chances that the kind of rigor that we have in financial reporting, it's not there in non-financial reporting. So I think with the CAs with their sort of assurance background, I think they can definitely help in bringing in more credibility to the non-financial reporting through providing assurance and through helping sort of companies build systems around the whole ESG reporting spectrum.
Thank you, Hemant. Moving on to you, Rohit. Rohit, demonstrating the structure, policies, and processes towards stakeholder engagement is in the BRSR formats. How can we promote stakeholder activism towards call for the BRSR disclosures and convince the organization that higher levels of maturity would add value and credibility to the organizations?
Sure, Sanjeev, that's a great question. In fact, in today's world, as we know, runaway climate change, environmental degradation, and social inequality are some of the biggest problems that the world faces. And in fact, the World Economic Forum has also come up with some stakeholder capitalism metrics, which offer a set of universal comparable disclosures focused on mainly 4 pillars. That is the people, planet, prosperity, and governance. And it includes various metrics such as greenhouse gas emissions, pay quality, and board diversity that companies can report on regardless of the industry or region. In fact, earlier this week, 61 business leaders across industries have committed to these core stakeholder capitalism metrics, and these include the Forbes listed companies like Shell, Unilever, Nestle, IBM, Dell, HP, Sony, and even Reliance Industries from India. So they have really already, committed to ensure that they reflect these core metrics in their reporting to the investors and other stakeholders, and also publicly support this work and encourage other business partners as well to do so. This would really promote the further convergence of these ESG standards and frameworks to ensure that the non-financial reporting gains momentum. So I think this move really signals that the private sector leaders also view the ESG factors as critical to the success and long-term viability of all business. And hence a unified force or a voice, I would say, is gathering pace on a global solution for non-financial reporting. And as this stakeholder capitalism becomes more mainstream, it will further encourage those who are not yet joined this stream to really start placing a premium on this enhanced sustainability compliance, which is the need of the hour. So I think these are some of the measures which really would push other corporates also who are so far sort of waiting on the fence, or as my panelists say, they probably would not want to share the disclosures. As these gain momentum, the other corporates would also be encouraged to come up with these scoring approach and also showcase how and what they are doing. As they say, a racer never runs so fast as when he has other racers to catch up and outpace. So I think in that regard, healthy competition in this space will really be helpful in spreading this and adoption as well. Thank you.
Thanks, Rohit. I actually completely agree with it. Pankaj, I want to ask you. Pankaj, are you there on the screen? Okay, okay, Pankaj is there. Pankaj, in your experience working with the largest of the companies, this is one of the member has also asked this question. Do you think that the markets reward those companies having better ESG disclosures, better ESG practices? And I would also like to ask an additional point in this. The leadership indicators which are there in the sustainability reporting, the new BRSR, do you think the top companies, especially the Nifty 50, tap this opportunity to their maximum advantage by providing the leadership indicators?
Yeah, so I think let me just go the reverse order. I think in terms of whether the leadership indicators would assist, clearly they would. I think they would clearly demonstrate the performance in a very differential manner, in a way becoming more trend-setting kind of structure for companies which follow those leadership indicators. I mentioned that earlier as well, that investors as well as other stakeholders looking at it. In fact, many of the Indian companies who've been doing this, majority of them have been doing it out of different reasons. But one of the reasons also is that stakeholders, particularly overseas, have been valuing your companies very, very differently if you have additional reporting, particularly when you are exporting to certain markets. And again, that's so there is enough evidence, Sanjeev, that there are stakeholders who would put incremental value to your business if the reporting has these different indicators of leadership as well as overall business reporting kind of framework. In fact, non-financial information has always been established to be a structure which is people who can compare companies' performance vis-a-vis the others. And I don't think it's read in separation. It's read in entirety with the financial indicators as well. I think the other point, in the leadership indicators, when you start looking at companies communicating, there are various ways they tend to communicate. I think that's important, that how that communication goes to the market. There are obviously, there is a little bit more need for being proactive than being reactive. I think today when you look at the kind of reporting that's happening is more reactive. There has to be proactive indicators and measures that should be brought in, which is what's happening as we speak. So from a qualitative standpoint as well as from quantitative standpoint, there is very clear evidence today that there is extra value that investors will give to companies who have a better framework, particularly when they're evaluating long-term value of these businesses. I don't know whether I've addressed your question.
Thank you, Pankaj. No, you have. I'm sure that the markets reward these companies. The members were asking this question, and I thought that who will be a better person than you to share this perspective. Moving on to you, Mr. Gupta. See, you have indicated that Indian Oil invested 17,000 crore rupees in making BS6 compliant fuel, and it was really heartening to note that BS6 will be equivalent to any green fuel. Honestly, I mean, this will give a lot of comfort to all those who use the petrol cars, that they are not polluting the climate. But there are companies who find procurement of raw material, waste disposal, and recycling challenges in this entire BRSR reporting. Or say, for example, that where the plant is located within 50 kilometers of a national park, etc. So, do you have any advice, or do you have any perspective? How can the companies overcome these challenges? Or do you think that these challenges are going to remain? Or do you think that these are the artificial barriers which have been created, and one can certainly overcome these challenges the way you have done in Indian Oil? Thank you.
Yeah, a very relevant question. So definitely these are definitely barriers. Now the question is whether these are welcome barriers or not. So I believe the way the world is moving in a particular direction towards environment sustainability, I think these barriers are essential. And any industry, leave it oil and gas, has to address to such concerns. So we do a lot of activities to see that how such impact of our operations can be mitigated. So for example, we have pollution standards by various state pollution control boards on the gaseous emissions as well as the liquid discharge from our refineries. And we always meet those targets. Despite meeting those targets, at times there are issues which are raised by the local population, alleging the pollution from our facilities. And then in that case, it remains our endeavor to see that how we can further reduce that, even when it is not mandated by any statutory guidelines. So we continuously are on lookout for such initiatives. We are trying to make all our refineries zero liquid discharge. We are trying to see that how emissions from our refineries can be captured and be converted usefully to generate a lot of other things. So, in fact, we are in the process of putting up certain facilities which will capture the emissions from our refineries and produce ethanol out of that. We are doing a lot of research and development at our flagship R&D center at Faridabad to see that how various initiatives can be taken. One such initiative is to recycle the plastic waste. So we are putting that plastic waste in our coker unit at one of the refineries. We have done that, and that gets recycled to the valuable petroleum products. So we are taking a lot of initiatives even beyond the statutory guidelines to see that such concerns of the local population are addressed. And I think going forward, this is extremely important. I have been part of various road shows for raising funds, external commercial borrowings. And in those road shows, perhaps financials is becoming secondary, and more and more questions are about business responsibility and sustainability. So a greater emphasis is being provided by the providers of capital, who are the source for the cheaper capital, they are laying a lot of emphasis on our initiatives in these directions. And if we look only for short-term benefits, then perhaps we will miss the bus. And it is imperative for every organization to address these concerns for longer-term benefits.
Thank you. Thank you, Sandeep ji. Kedar, since Sandeep ji mentioned about investors giving weightage, and you are the global head of the investor relations for TCS, what is your perspective? I mean, do you agree with Sandeep ji's statement that investors play a lot of emphasis on the companies who are doing well or who are doing exceedingly well on the ESG norms? Do they really reward those companies?
Oh, absolutely, yes, Sanjeev. In fact, I also wanted to add to what Mr. Pankaj Chadha said a few minutes ago. It's absolutely true. I mean, every year I interact with almost 300, 400 investors, both domestic and foreign. I can't think of a single institutional investor who doesn't have ESG criteria as part of their evaluation toolkit when they look at a corporate for material investment. Now, these are not explicit ESG funds. I'm not talking about ESG investing. There is a separate category of funds who only look at, or who give primacy to ESG criteria. I'm not talking about them. They are a special category. I'm talking of mainstream funds, the likes of Fidelity, Capital, all of these large funds globally who take large positions in Indian stocks. Every one of them has significant ESG criteria, and they, very rigorously go through all of that. Now, it's not just, there will also be cases of tick box evaluation, but setting that aside, the reason why they give so much weightage to this is the risks that many of these, non-financial issues represent, and which don't get adequately disclosed or addressed in annual reports or any formal communication from the corporate. And so the ESG evaluation essentially is a good opportunity for the investor to do their due diligence in terms of what kind of societal risks, what kind of political risks and environmental risks might there be. If you are BP had that large oil spill, I think around the coast of somewhere in North America, and that led to a catastrophic outcome, which also led to financial costs. Ultimately, that was borne by all stakeholders. We have examples in India itself where there were protests by local communities, which led to closures of plants. And so all of these are very, very material risks, and an investor should do due diligence in identifying these risks upfront before they actually, take a substantial position in those stocks. And as part of that, the ESG set of disclosures become a very important part of how cognizant is the management of these risks and how are they dealing with it. And at what level does the board look at it? So all of these are very, very important elements that the investors look at. And the results are there, for you to see. If you look at the, just about 3-4 days ago, Brand Finance released their top 500 brands in the world. In the IT services domain, in the top 10 brands in IT services, Indian companies are, I think have 4 positions out of 4 or 5 positions out of 10. I'm happy to tell you that TCS is the number 3 brand worldwide in IT services, just behind Accenture and IBM. And we are closing.
Congratulations.
Thanks. But the point I was making is that kind of brand building and the growth in brand value comes when you take into account all your stakeholders. It's not just about providing great services to your customers and building a fantastic customer rapport. That is, of course, the bare, the core essence of being a corporate, because to stay in business, you need to have a happy set of customers and you need to be relevant to them at all times. That is a given. But in today's world, you also need to think of the local communities, you need to think of employees, you need to think of the environment, you need to think of activists. So all of those form that larger set of stakeholders to whom the corporate needs to, who have different concerns, which the corporate needs to address. And doing so with the ESG framework, like what BRSR has recommended, and if you can move up on that maturity scale there, that will give a sense of comfort to all these different stakeholders, resulting not only a better brand value but also a better market capitalization. So that was the other milestone we achieved a couple of weeks ago. Again, in IT services, we are the most valued company today. Our market capitalization was over some $165 billion. But like I said, all that comes from the comfort that the markets get from knowing that you are aware of what the issues are and you are taking concrete steps to mitigate those. So that, I think, is really where the value of ESG comes through the most.
So Sanjeev, can I just add?
Yeah.
Just to what Kedar said, couple of points. I was attending a private equity and institutional investors forum, which is a global forum of all the large firms, just a couple of days ago. Okay, and this is global data of last 9 months. And again, I think he can tell you that there is very clear evidence that companies that were evaluated by private equities and institutional investors, and it is at different stage of their life, from startups to very mature organizations in terms of their strategy around ESG, and that's being put on record that they would put some number next to it. Again, every private equity, every institutional investor would find a way of valuing. So that's one point I wanted to make. And the second, Kedar can confirm it, but I can tell you many M&A groups of large conglomerates out of India and overseas now have specialists who would look at this before they take an acquisition forward. So this is pretty clearly established thing. I just wanted to re-emphasize on that for every participant here.
Thank you, Pankaj. Heyman, in fact, I can tell you, for me, this is turning out to be a program which is, 90% of the people who have registered are attending this program at this point of time, and all of them are chartered accountants. So you being a chartered accountant, you being an advisor as well as assurance provider on sustainability, can you, that 2,200 of them who are attending it live, that what is that companies look for in an ESG advisor or an ESG assurance provider? What is that they are looking for? That what is that you will be able to contribute to the company? What value you will be able to bring?
Sure. Thanks, Sanjeev, for the question, and I think. It's a very important question from the perspective of, as you mentioned, the people attending this webinar. So I think when ESG as an agenda, one, as I mentioned earlier, is gaining a lot of importance as we are moving along. Although in India, like companies have been reporting on ESG front or having ESG initiatives for long, but I think if we talk about last few years, it's gained a lot of momentum. And companies, when we talk about ESG, they look at help on 2 or 3 fronts. One is that how do you sort of reform your strategy in terms of approaching the ESG issues that your company is facing. Then if in terms of, so how do you strategize? How do you set your vision? How do you set your goals for ESG? So it's a lot beyond just assurance. Then if let's say a company has been able to set those vision, targets or goals, then how do you transform your operations? How do you involve your different departments, units into this whole process? How do you embed it into your decision-making process? And how do you basically, let's say if a company is setting up a manufacturing unit, then what are the sort of impact of, let's say, that new setup on, let's say, the environment and the community where they are sort of setting up? So all that. Then third thing that comes is the reporting. So again, and reporting has 2 aspects to it. One, for you to be able to reporting on those aspects, it is important that those initiatives that you're doing should be there. So again, so just to sort of summarize, I think both in terms of strategy, how do you transform your sort of business in terms of embedding ESG, then reporting, then comes how can you provide assurance on how do you sort of report, how do you have a system around capturing all the KPIs that you want to track, what are the controls around it, how does the board get comfort on it. So I think there are a lot of aspects around this whole ESG spectrum where chartered accountants can provide sort of help or advice to companies on as sort of I think this agenda moves forward and as people upskill on this.
Thanks, Hemant. So, I have asked this question from a service provider point of view. Let me flip this question and ask Mr. Sandeep Gupta from a service recipient point of view. Sandeep ji, what is the value add you are looking from a ESG service provider? And I mean, do you think that they play a major role in helping a company do better on the ESG parameters?
While at the outset, I would say that we have sufficient internal capabilities to take care of such issues, but definitely any external perspective is always welcome. So anybody who has exposure to such issues at perhaps global level would be a welcome advisor to a company of our stature. But as I said, we have our own flagship R&D center and which is doing a lot of work on various aspects of green energy or renewable energy and other aspects of maybe reducing the impacts of GHG emissions, etc. In fact, one thing which I forgot to mention earlier, we are also trying to capture CO2 and use it for the wells of ONGC to enhance the end oil recovery of their wells. So such initiatives also Indian Oil is engaged in. So what I'm saying is that we ourselves are aware of a lot of areas where such initiatives need to be taken. I'm not very sure at this point in time that what could be the advisors, but perhaps anybody who has a experience of working with the oil and gas industry worldwide and having proven its mental in ESG areas, perhaps would be a welcome. I think I am constrained of ideas at this point in time.
No. Yeah, Pankaj.
So I think just adding to what Mr. Gupta and Hemant said, I think when you look at the due diligence framework, so as I talked about M&A, there are a lot of areas where today, as I said, investors are looking at it, and there is need for chartered accountants to be in that space to be able to not only well-educated sector, as Mr. Gupta said, there are obviously global advisors today, and I can tell you there are a number of projects that we work, both transformative projects of saying if you want to be ESG compliant over the next 1 to 2 to 3 years, or innovative ideas of what more can actually be done based on global experiences. There is a lot of people who will do that. I think that's one. Tax in income taxes or taxes. Many countries today are giving incentives for you to go directionally towards ESG. And again, there are that whole space, which is where chartered accountants can work. And I'm sure India already has few, and there would be more that will be announced over the period of time. And that's another area where you could be advisors to companies, again, directing them of what they want to do and how can they best utilize those incentives. So I think there are various opportunities. I don't think it's an absolutely new space, number of opportunities for all of us here, as well as chartered accountants who are in practice here.
Yeah, I think Kedar also wants to add. Yes, yeah, Kedar.
I think Hemant actually covered all the big topics, but I think specific to BRSR and the maturity model that we just discussed today, I think a lot of corporates would benefit from having somebody handhold them and identify the gaps where they are currently and where they want to be, and give them a roadmap which will allow them, to go there stepwise. What are the next few steps I need to take over the next 12 months, so that next year's report can be, I don't know, if I'm level 2 now, if I want to be level 3 next year, what do I need to do in these next 12 months to get there? I think that handholding and a proper stepwise roadmap, which will allow them to put in place the policies, the procedures, and the metrics that are needed to measure the outcomes of those procedures. I think that kind of handholding and advisory services would be a lot in demand in the coming years once this framework becomes especially once it becomes a mandatory framework.
Great. And to act as a motivation, I can tell you that the Institute has announced that Institute will be giving 8 awards for the BRSR. So, there'll be awards. So obviously, companies will be competing and, try to give the best possible disclosures. Rohit, moving on to you, you come from an organization which caters to the civil society. Of course, all organizations do, but you are on the ground. So the sustainability reporting maturity model defines the end-to-end process and also identifies potential gaps relating to achievement of this maturity. What role can the civil society organization play towards the same, if any?
Yes, Sanjeev. Yeah, I think so. I would say I'm still a toddler in this space. Joined the development sector around 4 years back, but it's been a really fascinating journey for me to just learn about this entire civil society operation. And in fact, civil society is often on the front lines, I would say, protecting the most vulnerable in our societies as well as our natural resources. And in fact, the United Nations Sustainable Development Goals target 230 also emphasize on shared responsibilities of the government, civil societies, and the private sectors. So, we all really need to work together to ensure that, we meet our targets. And in fact, globally, civil societies have acted as a catalyst for critical national and global agenda and have assisted in bringing citizens' voice to the national and international strategies. They are very actively engaged in advocating, lobbying, and networking for initiatives like the SDGs, especially on ensuring people-friendly policies are there, and they use this strategy of partnership to put pressure on responsible actors such as the national governments and multilateral agencies. In fact, it's pretty famously said that civil societies keep urging the world leaders and the respective governments to walk the talk and in business as usual. So we've also seen during this pandemic stage how all these civil societies came together and supported the work of the national and state governments in providing relief. So, and their efforts were really lauded by everyone. And in fact, Transparency International also has recommended to UN that there needs to be a formal platform for civil society to interact with government delegations whenever any official government reports are presented. So I strongly believe that enabling a constructive dialogue between different stakeholders is at the heart of sustainable development. I think one sector or one organization cannot do it all. So the civil society can really supplement and scrutinize these reports, and then we'll be able to better ensure that no one is left behind during this implementation. So I do see a very, very important role in channelizing all these efforts are there. In fact, also I would encourage all the young CAs to also look at the social sector as one of the opportunity areas, because a lot of stuff is happening here, and with the CSR laws getting more and more mandatory requirements. So, a lot of talent is also required, and there are a lot of opportunities in terms of enhancing the corporate governances and building up best-in-class systems as we interact more and more with the corporate sector. So the civil society really has a big role to play in ensuring the adherence to these standards.
Thanks, Rohit. Thanks. Moving on to you, Hemant, I have received a question from the participants. Does technology has a role to play in collecting the non-financial data?
Thanks, Sanjeev. So I think it's a very pertinent question, and I think in today's world, technology has a role to play in probably everything that a company does. I mean, and if you're looking at, especially in a country like India, the kind of numbers that we deal with, I think when the kind of sort of expansion you can achieve with technology is important. So I think definitely technology is important for non-financial reporting, depending on the size of the company, the nature of its operations. If I talk about some of the large companies in India who have global footprints and who have been reporting or on ESG aspects for long, they cannot do it without having without use of technology. From the perspective of sort of having a framework where they can sort of capture that information right from the lowest level of operations where the actual activities happen to their corporate office where the data is collated and reported upon. So I think there can be lots of things there. As I said, one is having a tool to capture data at all levels, consolidation. There could be from the perspective of management and board, one could look at, or companies have dashboards in terms of ESG as to how the information is moving. So I think definitely there can be the technology has a role to play in non-financial reporting as much as it has to play in financial reporting.
Yes, Kedar, you want to add?
Yeah, sorry to interject again, but coming from a technology
company.
Exactly. So I had to put in my 2 bets. So one is what Hemant mentioned about using technology to actually capture the data, and that is absolutely basic, very fundamental, required to meet the disclosure requirements, especially if you want to do it in a timely fashion. But I wanted to actually take this one step further. Technology can actually help you achieve those goals that you are setting for yourself. If you are going to say that by in the next 5 years, I want to bring down my energy consumption per capita by, let's say, 30%, or I want to bring my carbon footprint to less than 50% of what it is today, technology can actually help you get there. And in fact, we did this about 4 or 5 years ago. We created this remote energy center, which is located in Kochi. It's in Kochi in Kerala, which actually captures on a real-time basis data from all our different facilities. So this is really using Internet of Things, and so it's capturing facility-level data on a real-time basis. So at any given point in time today, our folks can actually see what is the consumption at any given center, at the moment, starting from whatever the first of the month or year to date or whatever period you want to take a look at. But more importantly, once you have a sufficient body of data, you can train algorithms to now start running your facilities remotely. That is, when does the HVAC come on? When does the cooling begin? So there are patterns that the system can observe. That is, when a sufficient number of people enter the facility, maybe half hour before that, it will start cooling the systems versus starting it at 9 a.m. every day, right? So doing these things can actually bring down your energy consumption and meet those goals that you are setting for yourself. And so we, in fact, in the first year of deployment, there was a 10% reduction in our electricity consumption using this kind of remote monitoring and machine intelligence to do that.
That's really good.
I would like to pitch in.
Absolutely.
Mr. Kedar has very rightly pointed out, and a very similar example. We have 20 plus gas turbines in Indian Oil which use natural gas to generate power. And since the experts in this area is GE, and they are the providers of these machines, so we have to IoT, we have provided the facility to provide this data at their central station at Hyderabad recently, BHEL GE combined. and which will definitely ensure that the energy consumption, the fuel consumption for generating the same amount of power will get reduced. So definitely technology is a very big enabler towards achieving the ESG goals also, besides monitoring.
Thanks, Mr. Gupta. As we draw close to the the end of the program, yes, Dr. Suman. So before I ask a final question from Pankaj, yes, Dr. Suman, you want to add?
Sorry, I completely agree with Mr. Kedar and Hiban in that way, and of course Mr. Gupta, that from academics' point of view, when we look at the huge amount of data, and if we go back, we see that the reporting a long time ago, those were particularly using typewriters and then scanned and then getting the data, huge amount of data for those machine learning or artificial intelligence for better policy implications. Those are very, very difficult. But nowadays, with the introduction of XBRL format, it becomes quite easier for all of us or financial data analysts to help the industry, the company, to guide through in which way they should move for a better achievement.
Right, thank you. So Pankaj, last question for the day, because it's time. Of course, there are a number of questions that I've received. And this is from a board point of view. What do you think that how can the sustainability reporting maturity model act as a tool for the board of directors in determining what they should be doing in relation to oversight of how their company are being managed and making disclosures about ESG sustainability issues?
Yeah, so very, very important question. I think very relevant as well. I must tell you, I think there was this conference we did just 4 or 5 weeks ago where we've had more than 150 independent directors who came on. And obviously, we've had some professors from Harvard University who were speaking, and there were people in our own larger organization came and spoke. But then we've had few of these directors who were commenting on how do they see value. And it's not my transcript, it is their transcript. They're actually looking at long-term value in a very serious manner in every business. They're saying, well, look, it's always good to look at quarter-on-quarter, annual results, half-yearly results on a financial matrices, but where is that long-term value? And I think there are those questions that have been put on the table by the board members, and they're very curious. In fact, some of the board members actually suggested that we should not wait any further of making it mandatory for certain class of companies. Most of those companies who are globally competing, it should be immediate imperative. So those kind of comments have come in. I can tell you there is also a need by many of these Indian independent directors and other directors on the board who are wanting to be educated more on saying where do those ideas reside. So there is that demand by the board members, but irrespective, there is very clear focus. They understand that there are stakeholders who are looking at these parameters. They understand that there is need for them to understand, appreciate, as well as advise back to the companies on what is good for them. So I think with positive time, I'll just stop here. But Sanjeev, there is a lot of focus by the boards. I think that's where I'll leave it. You're on mute, Sanjeev.
Sorry. Thank you. I think on this virtual mode, we should always check. Can you hear me? Can you see me? Probably I just lost that golden rule. So we'll need to close this session. This was turning out to be a very, very interesting session. And initially, honestly, I have not thought that 2,200 plus members will log in. I mean, of course, 2,500 was the maximum capacity, but 2,200 plus members have logged in and asking questions. I would request my co-chairman, Durgesh Kabra, who has stood like a rock with me in this board, in this challenging and very exciting first year, to give his closing remarks and his word of thanks. And I would like to personally thank all the panelists for giving such wonderful insights, and Dr. Manamita Nandi and Dr. Suman for giving an outstanding presentation and also helping India have its first ever sustainability reporting maturity model. Over to you.
Thank you, Chairman sir. It's indeed a pleasure after listening to all, giving the concluding remark and well-deserved vote of thanks to all the panelists. But before that, let me tell that the discussion at the virtual CPE meeting, which is held today, are going to be very enriching for one and all present. And I'm sure that the thoughts and views expressed on this crucial topic of global importance would enlighten the accounting fraternity, not only in India, but across the globe. The sustainability reporting maturity model is going to provide an innovative solutions to support the companies move towards sustainable development and explore the possibility to individually assess its position vis-a-vis the defined maturity level. As Dr. Nandi said, Nandi and Dr. Suman gave a very detailed presentation, we all know, and we have seen and listened also regarding the sustainability reporting maturity model. They really explained very well the concept of SRMM and how this model will be helpful for the corporate in their sustainable journey. CA Pankaj Chatterjee gave practical examples of how sustainability measures are beneficial to companies in long term, especially in lowering down the cost of capital. Also, CA Sandeep Guptaji threw light on the sustainability reporting journey of Indian oil and also how harmful emissions are being controlled at the various plants. It's really heartening to note that Indian oil is really focusing on negating carbon emissions, and there is organizational consciousness towards the sustainability issues. Kedar Shirali ji pointed out on the biggest benefit of SRMM is that more companies will be encouraged to start doing sustainability reporting once some matured standards are available. It is indeed a great start of sustainability journey, and as an institute, the ICAI and SRSB is going to be committed to give best out of the board, and it is said by Kedarji and others that they will also be supporting the cause of SRMM to the SRSB. As far as CA Heman Shabarwal is concerned, he has highlighted important role of chartered accountant in the area of sustainability reporting, which is indeed going to benefit all the chartered accountants who would like to have the career into it. CA Rohit Nayarji has explained very emphatically how stakeholders can push and promote the sustainability agenda in the corporate. And friends, I'm sure after listening to all these panelists and having question answers with them, posing your own questions, I'm sure that the chartered accountants have a huge role to play in non-financial reporting as well as assisting business towards the same. Further, the chartered accountants can lead in formulating and applying the relevant methodology, guidelines, and processes for sustainability measurement. Friends, let me do the wonderful toss at the end. After summarizing all this, that I would like to thank Dr. Monomita Nandi and Dr. Suman Lodh for presenting their thoughts, views, and valuable insight in the SRMM, which is going to be a new concept in India and will help a lot to the corporate world. We also would like to thank other panel speakers, CA Rohit Nayarji, CA Sandeep Kumar Guptaji, Shri Kedar Shiraliji, CA Pankaj Chatterjee, CA Heman Shabarwalji, and our chairman, Dr. Sanjeev Singhal for their immensely useful deliberation on this much needed concept, which is indeed going to help all the professional brothers and our fraternity at large. I also thank all the attendees of virtual CPE meeting for their patient listening. I urge our members to upskill and take a lead in evolving sustainable landscape. With this, thank you all, friends. And I believe that under the leadership of the Chairman, Sir, Sanjeev Singhal probably we wish that he may be again Chairman for the next year. But this is going to be the last virtual CPE meeting. We may have the board meeting for the same, but the virtual CPE meeting is going to be last for this year under his chairmanship, and he has done wonders. And I have learned a lot under his leadership. Thank you all. Thanks a lot.
Thank you very much. Thanks,
Thank you
everyone.
very
Thanks,
much.
Durgesh Bhai. Thank you.
Thank you.
Thank you, everyone.
Thank you very much. Thank you.
Bye.